Global Business Report here on News9 Live. I'm Krishna Kumar. We begin with a check on how Wall Street closed for trading on Friday. That was last week. So Wall Street ending sharply in the red because of the mounting concerns over the conflict in West Asia, and that drove investors into a state of severe unease. This abrupt, significant market downturn that has sent shockwaves through the financial landscape, leaving traders, analysts, and everyday Americans all grappling with uncertainty. Take a look at this detailed report on how Wall Street closed for trading.
Major U.S. stock indexes ended sharply lower on Friday as investors worried about the possibility of more rate hikes and the spread of the Israel-Hamas war. The Dow dropped nearly 0.9%, the S&P 500 tumbled almost 1.3%, and the Nasdaq plunged more than 1.5%. All 11 of the S&P 500's sectors fell in broad-based selling.
I still think that there's a lot of things impacting the market.
Marianne Bartels is chief investment strategist at Sanctuary Wealth.
We're in earnings season now. That's impacting the market. There's concerns about what's happening over in the Middle East. The real big concern, and I think what's really the equity market has been sensitive to, is the bond market, because we've seen 10-year Treasury yields rising. And so there's a number of factors that are driving the market through this whole week, and I expect can continue to actually impact the market through the rest of the month.
The benchmark 10-year Treasury yield pulled back a bit a day after crossing 5% for the first time since July 2007. The upward move coming after Federal Reserve Chair Jerome Powell on Thursday said the economy's strength and tight labor markets could require tougher borrowing conditions to control inflation. In earnings news, shares of Regions Financial stumbled more than 12% to their lowest level since March of 2020. The bank expects fourth quarter net interest income to decline about 5% compared with the preceding 3 months as banks pay more to retain deposits. The KBW Regional Banking Index closed down 3.5%. Shares of credit card company American Express fell nearly 5.5%, even though its third quarter profit beat expectations. And shares of SolarEdge slumped more than 27% after it warned of significantly lower revenue in the fourth quarter.
Right, so that's how Wall Street closed for trading. But as we begin this week, global markets are set to continue their roller coaster ride. Investors are bracing for more uncertainty that is in a landscape shaped by uncertainty and unexpected events. Markets' reaction to the conflict between Israel and Hamas has been relatively modest so far. Now, what are the factors driving these market dynamics and what the future might hold for businesses and investors alike? Take a look at this latest Reuters report for what the expert insights are in the way the global markets are going to react going forward. Take a look.
From escalating tension in the Middle East to China's property pain, these are the stories to watch in business and finance. Market reaction to the conflict between Israel and militant group Hamas has been relatively modest so far. Wall Street's so-called fear gauge, the VIX index, shows investors are not as nervous as they were when Russia invaded Ukraine last year. Oil is the barometer to watch. Flash manufacturing and service sector activity surveys in the coming days could add to uncertainty. The European Central Bank meets on Thursday. It will likely have one eye on the Middle East and the other on a weakening economy. The ECB says it's still quite some distance from easing monetary policy, but traders can expect a pause for now. Microsoft and Alphabet results are due on Tuesday, Meta Platforms on Wednesday, and Amazon on Thursday. Those stocks, along with Apple, Nvidia, and Tesla combined, have accounted for the bulk of the S&P 500's 11% year-to-date gain, so any results disappointment could have broad fallout. Third quarter GDP and the monthly personal consumption expenditures price index are also due. Property turmoil threatens China's 5% growth target, even after a consensus-smashing 4.9% quarterly expansion. That hasn't escaped investors who pushed mainland shares to a nearly one-year trough. A lot of what's happening is hidden from view, and pressure on Beijing for further stimulus is strong. Steps so far have disappointed.
Right, so that's what to expect in the week going forward. Now, keeping it with China. China, the global powerhouse in battery production, is now all set to curb its exports of a key battery material. This move is sending shockwaves through the international energy sector and could have profound implications for the future of green technology, as in electric vehicles. Remember, China refines more than 90% of the world's graphite into the material used in virtually all EV battery anodes. China's decision is rippling through the international energy sector and triggering both curiosity and concern. What will be the implications of this latest move by China? This report tells you more.
New restrictions announced in China could be unwelcome news for the growing electric vehicle market. Beijing said on Friday it will require export permits for some graphite products to protect national security. It's the latest move by the country to control supplies of critical minerals in response to challenges over its global manufacturing dominance. The reason this might hurt EV makers is because China refines more than 90% of the world's graphite into the material used in virtually all EV battery anodes. That's the negatively charged portion of a battery. One analyst said South Korean firms heavily rely on the graphite imports from China, but would have to look elsewhere to the US or Australia, and that would likely raise the cost burden for many. Automakers are now racing to lock in supplies from outside China, but there could be shortages. China will now require, as of December, that exporters apply for permits to ship two types of graphite. Beijing said the move was conducive to ensuring the security and stability of the global supply chain and safeguarding national security. China's decision comes while the EU considers tariffs on Chinese-made EVs, which it argues unfairly benefit from subsidies. The US government also widened curbs on Chinese companies' access to semiconductors earlier this week. Analysts said it was not clear how much impact the new measures on graphite will have in the short term. But on Friday, shares in China's new energy vehicle and battery makers rose after the announcement.
Right. Let's take our focus away from China to ASML, a titan in Europe's technology landscape. This renowned semiconductor equipment manufacturer, often considered the linchpin of Europe's tech prowess, is warning of tough times ahead, and the implications are significant. More details in this report.
Europe's top tech firm is warning of tougher times ahead. Chip equipment maker ASML said Wednesday that orders were weaker than expected, and it warned sales next year could come in flat as customers conserve cash amid an uncertain economic outlook. The company said the global chip industry was probably near a trough, but 2024 could still be a year of transition. ASML dominates the market for the lithography machines that make semiconductors. They cost hundreds of millions of dollars apiece and are used by cutting-edge chip makers like Intel and Samsung. The company says it still has an order backlog totaling some $37 billion and is betting 2025 will see sales surge again. That as many of its big customers draw up major expansion plans. ASML says it doesn't expect any impact from US plans to restrict sales of advanced chip gear to China. On Wednesday, the firm reported net profit of just over $2 billion for the latest quarter, in line with forecasts. Its shares fell over 4% in early trade following the wary outlook for sales.
Now, keeping it with technology, tech visionary Elon Musk is no stranger to innovation, and he is now setting sights on new innovations at X, or formerly called as Twitter. Musk has unveiled his ambitious plans to introduce premium subscriptions to X, and this move is poised to reshape how we use the platform and potentially the entire landscape of social media as such. While details are still sketchy and emerging, it is expected that these premium subscriptions will offer exclusive features and content which is ad-free for subscribers. Take a look at this report for more details.
A new subscription model is on the way for X users. Company owner Elon Musk said Friday he will soon launch 2 new tiers of premium subscriptions. He posted on X, formerly known as Twitter, that one is a lower cost with all features but no reduction in ads. The other, he said, is more expensive but has no ads. Musk didn't give more detail on the plans. Earlier this week, X started charging new users $1 in New Zealand and the Philippines as a test case for accessing the platform. New users who opt out of subscribing will get read-only access. X said that includes reading posts, watching videos and following accounts. Its not a bot subscription method aims to reduce spam, manipulation of the platform and bot activity. It's now a year since Musk took over the social media giant. He made rapid changes with mass layoffs and the disbandment of content moderation teams. That's led some advertisers to halt marketing on the service. Musk has acknowledged X has taken a hit on revenue and blamed activists for pressuring advertisers.
From Elon Musk to something is closely related with Hollywood. Hollywood's most celebrated actors and faces we've grown to love on the silver screen are soon approaching a remarkable milestone. They are 100 days on strike. This extended labor dispute in Hollywood is more than just a mere blip on the radar. It's a testament to the mounting tensions within America's entertainment industry. More details in this report from Reuters. Take a look.
Thank you so much. So great. And thank you for cigarettes so much.
The feeling is that we're going to keep strong. We're going to keep going. I don't think there's any waning from anyone on the ground.
And we're just hoping that the union is just trying to fight as fairly and get as much for us as possible because, you know, everything else is raising and our rates are not raising. That's strange.
Day one of the WGA, and I try to picket every
A-listers can't work without the B and C listers underneath them supporting the rest of the show. So thrilled that they're involved, thrilled that they're emotionally committed and even willing to get financially committed on what's going on.
And finally, we bring you a story that's nothing short of extraordinary from the world of fine spirits. A rare Scotch whiskey, a true liquid gem, is poised to rewrite record books as it heads to the auction block with the potential to fetch an astonishing $1.5 million. This isn't just any bottle. It's a testament to the craft, history and the allure of Scotch whiskey. What makes this particular bottle so special, you ask? Well, it's a blend of many factors. First and foremost, it's an exceptionally rare vintage, meticulously crafted by skilled distillers, and lots more that has gone into the making of it. This report tells you more.
So of the 12 bottles that exist of the Macallan Adami, this is different from the rest as the capsule has been replaced with an exact tin replica of the original, and the cork within has been replaced and the label has been reconditioned by the Macallan. I'm one of the few people who's been lucky enough to have a very small taste of this, but when I mean very small, I mean very small. So we pipetted some out for a test sample, and I had one drop from the end of this pipette. I got to nose a full sample though, and it's very rich, very Christmassy. There's a lot of European oak, you can tell by the color. So there's a lot of wood tannin, a lot of oak and spice in there. But really it's like a classic sherry matured whiskey, which is your dried fruit character.
And that's all we have time for on this edition of Global Business Report. Thank you so much for watching. It's a wrap here from my side. This is Krishna Kumar signing off. Keep it with News9.
With all this gear, you must be wondering if I'm climbing a mountain. Well, let me give you a wider look of this place. This is